All right, welcome everyone. Welcome to today's live stream. With me today, I have Dirk from PrimeXBT Academy. We're going to talk about the markets, and I know Dirk has some really interesting insights into. You talked about in the beginning here about how the markets are behaving similarly today with if you compare the Trump's presidency and Biden's presidency. So two very different presidents, but the market seems to be acting the same here. And you had some interesting analysis on that. Maybe you could walk us through that and what your thoughts are.
Sure, my pleasure. Hello, everybody out there. Nice to be here again. Maybe if you want to share my screen here.
Yeah, I'll add it right away.
Great. Yeah, that looks good. All right. So I sat down on the weekend and was kind of looking through the market, scrolling the market, looking for ideas for the next week where possible trades could be. And I noticed something which I thought is really too much of a similarity in pattern-wise that it could be a coincidence. I want to scroll out here a little bit and do my overlay of thing. So I noticed that if we look at how the stock market, so this is the S&P 500, biggest, most important stock index in the world, and I noticed that what we are seeing right now in terms of development and price patterns is pretty much the same or almost the same that we saw back then after Trump was elected. So Trump elected back then November 2016. So that is this line here. And if you then look at the first 444 days, the stock markets were going up majorly. So we had a performance of 32.8%. And after this, we had this wild ride, mainly caused by back then the trade tensions and trade embargoes and taxations between the US and China. But what happened there on a macro level, I think, is not so interesting for us. So basically, we had this wild swings here up and down. What you can see here with a red arrow, which then bottomed, found a bottom here eventually in January or December 2018. So basically, a bear market, sideways bear market, choppy volatility phase for 332 days. And I looked at, so we're roughly talking about the first 2 years, a little bit more than 2 years after Donald Trump was elected. And I thought, well, if you're elected as a president, probably the first 2 years is when you want to get things done in a 4-year election cycle, because after this, you might want to focus again on, getting your butt re-elected the next time. Well, that obviously didn't happen. So Trump lost to Biden in 2020, 3rd of November 2020. And then I thought, maybe it would be fun, to see what happened in the first 444 days after Biden won the election. Remember, I just showed you 440 days of very good stock markets performance under Trump after his election. And if we look at the first 440 days under Biden here, we are seeing pretty much the same pattern. So 444 days since the election is that yellow line, and you can see shortly before those 444 days, the market also topped out and then started to enter this choppy volatility pattern. And if you look how this pattern after those 444 days looked, so we're talking about this year now at the moment, this one pretty much has really looks pretty much like what we are seeing right now. And now the interesting thing for me is, okay, if like the first 444 days after election, we saw pretty much the same market behavior, well, maybe we could expect then in the 332 days after this, also the same market pattern. And remember, back then, this pattern resolved itself by making a new low. Here, actually, was on Christmas, December 24th, 2018. So nice Christmas present for everybody investing in stocks back then, where the market found a bottom. Now, Biden, this pattern has not yet resolved itself. So if we see the same and we count 332 days into the future, after the 21st of January 2022, we land here at the 16th of December 2022, where we, according to the similarities we see here in patterns, could expect a new stock market low. Now, to be fair, we are seeing here the stock market made its high earlier already than those 444 days. So if we count from the top here, we land on the 2nd of December. So if history repeats itself, and in my opinion, really, it looks a little bit like this. This is really so eerie similar. We could see a new stock market low. Don't want to talk about prices because that's a whole different thing, but a new swing low, maybe somewhere here between the 2nd of December 2022 and the 19th of December 2022. Now, I did a video on this on Monday. If you are interested, I'll go in much more detail there than I want to do here now today. I want to keep things a little bit shorter. But the question I got after this really was like, okay, you know, why is that interesting for me as somebody who wants to trade cryptocurrencies? And the simple answer to this is, in a bear market, you cannot trade cryptocurrencies without having an eye on the stock market, because Bitcoin and the whole cryptocurrency market and the S&P 500 are closely correlated. And we see this here, especially after the tops in November 2021. So when we topped out at roughly 69,000. I mean, look at the red line here, the S&P 500, and look at the blue line, Bitcoin. You know, they really move almost too much in sync. So whatever the S&P 500 does at the moment, Bitcoin will copy, because there's so much fear in the market at the moment that investors are looking at let's say the big guns out there, are looking at the flagships when it comes to investing, and that is the S&P 500 for Bitcoin. And if you were watching 2 weeks ago our live stream here, I talked about something that I like to call the Bitcoin logarithmic regression model, and which also says that we can expect a sideways movement or a slight down movement until November, earliest November 2022, until we see Bitcoin maybe rising again to the likes of 30,000, of 35, or maybe even 40,000 and higher. And this, in my opinion, also fits very, very good into this narration that we might see a bottom in the stock market somewhere in the beginning of December. You know, it's, of course, always very hard to nail something like this time-wise. But for me as a trader, especially from maybe my swing trades or longer-term trades, you know, I want to keep this in the back of my head to kind of be prepared that, you know, we are not out of the worst yet. I've been seeing social media, especially since Bitcoin rose above 20,000 US dollars, you know, getting very, very positive suddenly again. Well, like people out there calling, oh, bear market is over. We are seeing the bull run again. Now invest now, buy, you know, we are going to the moon. Or to the likes like this. Well, we might not be out of the worst yet. There still might be a new swing low coming from the stock market. And that would mean for Bitcoin also that maybe we touch this green line down here again, which at the moment is somewhere around 20,000 US dollars, maybe even a little bit lower. So this is something that I might not follow trade-wise, but it's something that I want to keep in the back of my head when I become maybe too euphoric about the cryptocurrency markets again. Yeah, so that in short summary from my side.
Yeah, all right. I think that's a very interesting analysis. I do like the fact that it's almost exactly 444 days from the election to the top. That's very interesting. That it's just, you know,
it's like normally I'm not so much a believer in like, okay, you know, patterns always repeat themselves to a certain extent, yes, but not like, you know, exactly by the number. But this one really, I think it's too much alike to really be considered a coincidence, especially with what followed after this. So this, this volatility pattern we are seeing really after those 444 days. It looks, oops, no, that's not what I wanted. I wanted this one. It looks so much alike of what we've been seeing here. Slump down, up.
Yeah, I've started researching. I've started researching the timing aspect of macro cycles, looking at the bigger scale of months and years. I've started researching WD Gann and his how he analyzed it's analyzing the market using timed square and that kind of stuff, right? It's very advanced, and I'm reading a book called The Law of Vibration, and it's like some really spooky, almost really weird stuff, but it's there's definitely something there. And when it comes to analysis and like this, and we're looking at a specific time and date, using his analysis, I'm gonna see if I can find something that kind of fits this, because it's very interesting, because there might be something telling us that there might be something happening at that time, and then the election cycle might then act as the catalyst for this too. I mean, there's so much going into this, but you're basically looking at what the move here. Like, when did Biden get elected? Was that around?
That was around. I think I accidentally moved it. It was early November 2020.
Early November.
Yeah.
Yeah, if you look at that low, I can show you here, right? Give me a second. So I'm gonna add my chart here. So if you add, it should be this low right here. So let's use the weekly. It should be around this area right here.
Yeah.
And I also like that it's kind of confluent with, so that's the COVID crash, I believe, right here, and that's the top of the Trump rally, or at least the top at the of the COVID crash. What's interesting here, if you look at, that's the low prior to Biden's election, and if you add the fibs from that low to this high, we're right now. I do like the fact that if you're looking at that election cycle from where he got elected, we're in a very interesting area right here. So you also talked about in the case with Trump, you came up, right? You had a fairly like almost like a bear market rally.
It was more than that, actually. The S&P back then made a new high eventually before really crashing down. But for me, it's whether that happens or not could, of course, be the case. For me, it's more interesting, to look at the pattern as a whole, which indicates, you might be going higher. And this kind of fits also, the typical market cycle that we see, where everybody gets pumped again, euphoric. And then, as you just said, something happens again, that risky assets come crashing down. And it's also interesting from actually, if I want to say something mean towards politicians, what does that say about the macro? How much influence does a US president really have on the economy if things just keep repeating themselves,
Yeah, and especially now with two very different presidents. Obviously, I don't know the detail of their economic plans and how they're trying to solve whatever, but it's definitely interesting to see that the markets. I believe that the overall macro markets, if you look at the higher scale, they do move in trends. And if you look at the overall market structure going back, maybe 100 years, you're going to see trends in the market structure, because it's all psychology. It doesn't really matter what president you have. If you look at the bigger scale, there's very few individual things that will change the overall, characteristics of financial markets. So that's a very interesting point. So basically, with your analysis here, you're and it kind of lines up with what we're seeing right now, because we are, and I do have that feeling as well that if you ignore the fact that we had that Pelosi, right, flew to Taiwan, and that kind of.
I mean, that was, I think, just last night, no, where she landed.
Yeah, that might be a recipe for kind of stirring up stirring up the risk sentiment. But if you ignore that, I do feel like the general situation around the world is kind of calming down from what we had 6 months ago, and we are seeing risk assets kind of performing interestingly. I mean, if you look at let's see, the S&P 500 from this perspective right here, we're definitely seeing. I mean, there's something going on here. You could definitely say. I mean, first of all, for me, a very interesting, a very important factor for me in trading when it comes to going long or going short, I need price to be above the daily 20 and 50 EMA, and especially interesting if the daily 20 crosses above the 50, like happened right here. That then tells me that I'm now interested in looking for long setups on this asset right now. And it kind of looks like the S&P 500 has, broken somewhat of a trend line. I mean, this is still a downtrend. Like, make no mistakes about it. A lot of people would add a trend line here and say, like, we broke above the trend line. They will add a trend line here and say we broke above the trend line. We're not bullish. But there's honestly, like, there's nothing bullish about a downtrend, really. But there can definitely be a bear rally here, right, with what we're seeing right now. And it kind of lines up with what the sentiment I'm seeing on Twitter as well, and in the financial news. There might be something going on here, but then again, we have a lot of levels above that needs to get reclaimed for me to really feel like we're in a full-on bull market again. I mean, this whole area right here could be like a really strong resistance area, and even with a move up here, this would be considered as a pretty strong bear market rally, right? So you look at S&P 500, it's kind of breaking out a local range, it's reclaiming the daily moving averages. Bitcoin is also doing something interesting right here. It's not looking as strong, but I mean, if we do get a hit of that short RLZ right here, this 28K level right here, that would also be a pretty decent bear market rally. But it's not even close to being a bull market in my opinion. So we could see some really good gains here. We could be trading all coins to the upside, do some interesting trades for the next couple of weeks, because this could take 2 months to reach this level, right? So we could have some really interesting moves in altcoin market and Bitcoin and risk assets. And I believe it's at that point where a bear market rally fails, right? When everyone starts, because I'm pretty sure a lot of people will realize that there's a chance that the bull market is on around this level, right?
Absolutely, absolutely.
People start buying spot positions and start upping the leverage very close to resistance. But if you look at Bitcoin, it's the same with Bitcoin. I mean, you have this very, very clear level, and there's no macro bull market until we kind of have this, right? And same for the S&P 500. You could look at this whole area right here, just like this level for Bitcoin. Now, as investors, we have to kind of take this into consideration if we're going to be investing for the next 2 or 3 years, right? We have to look at this as a possible resistance and kind of try to manage our positions based on this resistance. But as traders, we have this whole area right here, and that's just a free open space. Could definitely be trading to the upside, I believe, within this space. So that's about between, let's say, 24K and 28K.
I mean, I was surprised. To remember 2 weeks ago, I said I just went long at 23,500 in Bitcoin for a swing trade because I had this breakout out of the Bollinger squeeze first time this pattern has failed me, by the way, now. So sadly not 100% success anymore. I was stopped out of the position at 21,000, and the move out of the range was not very dynamic. And this is a good example, again, why it's so important to stick to your stop loss. It was not so dynamic because we had Tesla coming in again. They kind of spoiled the party with their quarterly results, where they released that they sold, I think, 75% of their Bitcoin holdings. Although Elon Musk said then, hey, this does not mean this is by all means no opinion, no stance on Bitcoin. We just need the liquidity to keep our factories running because they have all kinds of other problems. But you can see really how fast news like this, macro news like this, can really spoil a party. So you can do all the analysis you want from your charts, and everything speaks for it. There can be a third party that's going to spoil your party and your position, by the way. And that's why it's so important, to stick to your stop loss.
I think a great example of that is I want to take a look at a trade I took I believe this week or maybe last week. I remember that was this week. So you had I wanted to trade, I believe it was AUD. I believe it was this one. Let me check my. Yeah, right. So I believe it was this one. Something here, AUD, NCD, or maybe it was, it was some pair paired with AUD, and I believe it was AUD, NCD, perhaps this one right here. Yeah, I believe it was this one. So I remember entering, maybe not exactly this pair, but it was something paired with AUD. So on Tuesday morning, we had the Australian Central Bank making a interest rate decision, right? So I remember entering this based on very good technicals, right? So the system lined up perfectly, right? And I entered this one, and I had my stops probably below here, and the news event came along and completely invalidated the whole structure, the whole technical structure of the trade. So it's really in the same way that the economic news releases in the forex market is affecting the forex market. All the fundamentals events going on around the world will affect other markets. Just like you say now, Tesla announcing that they sold Bitcoin affected the price of Bitcoin and kind of halted that nice breakout that we had right here. So I think it's important for technical traders to understand that fundamentals move the market. It's not it's not the fib levels or trend lines, stuff like that. That doesn't move the markets. It's not it's the fundamental events that is going on around the world that is moving the markets. And I think it's important to understand the relationship between risk on and risk off, right? Yeah. So when you have a risk on scenario, assets like Bitcoin, the S&P 500, they will move to the upside. They will move bullishly because the economic structure or the macroeconomic structure are telling you that we are in a safe environment for investors to invest their money into the stock market, into Bitcoin, into perhaps oil, stuff like that. That's moving bullishly in a bull market in a risk-on environment. And then, of course, you compare that with a risk-off environment where investors are keeping cash and not interested in risking their hard-earned money into the risk assets. And that, I believe, you showed us the correlation between the S&P 500 and Bitcoin, and I think it's just that simple. Bitcoin is a risk asset. The S&P 500 is a risk asset. I mean, you look at all the indices. You look at the Dow Jones, Wall Street. They look very similarly. So this is US 30, because UK 100, not very that similar. But you look at the Nasdaq, S&P 500, US 30. They all look pretty much the same. They're all US indices, and they will move together, and they're going to be moving together with Bitcoin as well. So I think it's a very good idea for new traders to get an understanding of what the risk sentiment is and how that's moving, moving the markets. I think that's very interesting for all.
I think also I know a lot of viewers, beginners, kind of are attracted to scalping. Which I always understand. It's kind of fun, exciting to look at 5-minute charts or 50-minute charts or maybe even 1-minute charts. And I always say, don't do that. Master maybe the higher time frames first. But I know people will do it anyway. But one thing really you should look at, and this ties into what Lip just said, is that if you look at Bitcoin, you will notice the closer we come to the opening bell of the stock market. So that's at, I think, 2:30 CET. What is that? 12:30 UTC it should be. The more Bitcoin will start from the intraday moves to copy what the S&P 500 is doing. So if you are trading intraday Bitcoin, the closer you get to the opening of a stock market, of the US stock market, the more you have to shift your attention to the stock markets in order to find entries for your Bitcoin scalps. And this is something that normally, when you have like back tests of systems, of intraday systems for some indicators, that nobody's really doing. They just blindly back test it and say, okay, it doesn't work, or it works maybe if you are lucky, but they don't see the relationship, how the focus and what is influencing what throughout a day can shift. That's
a really interesting point there. You're talking back testing, and I actually want to show you something here. I've been working on a backtesting template right here, and this is really interesting. So what you can do with this backtesting template is I don't think you have to put in the date, but you can put in the date, time of entry, result in R, how much you made in the trade, and then you can enter different confluences right here. So you can write in what confluence you want to track. So it's a 1 or a 0 for yes or no, and you will see your profitability over different sessions, right? So here you can see what session of the day or what trading session are you most profitable in, and you can also add. So if you're scalping Bitcoin, for example, and you can, if you want to know, if you want to see how that S&P 500 opening is influencing your trade, you can, for example, change this to the confluence name of S&P 500 and then put a yes or no, a 1 or 0 if it's around the time of that opening. And I do believe that even if you're using a template like this one, that's how you should backtest, right? So you should not leave anything to chance, because if you're only backtesting, like let's say you have a specific, let's take a look at this link trade that we talked about. I think I talked about it in my last live stream. So let's say you want to backtest this idea right here, and when backtesting, you want to have as much data as possible, because you're basically backtesting to gain as much statistics as possible on the trade to see what's actually working. And like you said, something a lot of people don't care about is the time of day of entry, what day of the week, and stuff like that, which is super important to know when developing a system. Like it really goes, there's so much more to developing a system than a lot of people think. It's really advanced. Like it's really advanced. It's like, trading is a business, right? So you have a trading plan, like business plan, but building a successful business requires a whole lot of work, and it's marketing, it's all that kind of stuff. And the same thing goes into creating that trading business, because your trading plan and your trading system is part of that trading business. And it's just very advanced actually to create something that's actually working. I want to, because we have this link set up right here, I'm thinking we can go through the crypto market to see if, like, do you have anything you're watching? Any possible setups? Anything
No, I think like what you mentioned here just now with Link sounds very interesting to me. I think you mentioned it on Monday in your live stream, if I'm not mistaken. But
maybe Monday.
Yeah.
I'm actually trying to find that live stream. I'm gonna go back and look at Monday. So I can kind of go through this idea here. I remember, I think we can use the replay function here to kind of get a good overview. So I was very surprised to see it bounce here, honestly. Very surprised to see it bounce because Bitcoin didn't really do what I thought or what I wanted it to do. So I remember looking at Bitcoin and I said I wanted to see a move, a bounce on the daily 50 EMA or a bounce on the daily 20 EMA. So it actually almost did what I wanted. So it came very close to the daily 20. So usually I view these levels, I view the EMAs as like a buffer zone, maybe something like this around the level, because there's always going to be, so always going to either test it perfectly, overshoot it a little bit, or front run it. And especially if you have like a good level right here, as you can see right here, it hit that 50, front running the 20 EMA. And I'm pretty sure my idea for Link was based on Bitcoin coming down and testing the daily 20 EMA. And if Bitcoin would test the daily 20 EMA, Link would perhaps retrace all the way back down to this breakout level right here, which is like in a good confluence area right here with the fibs, and you have a good level. It's also the daily 50 EMA and the daily 20 EMA. So you'll see price come down and hit that level perfectly. I obviously, I didn't take this trade, but if I would take this trade, I would probably enter on, if you look at the 1 hour, I like the candle right here. And that candle would also perhaps close this 4 hour candle. So I like that level. But then again, it's not exactly what I'm looking for in a trade, because I also want to see that I would rather play this based on the 4 hour moving averages, which is above price here. So it's kind of probably going to act as resistance. And then I also have the weekly and monthly open here. So there's a few things here which I don't like about this trade. So I'm not in this one. What I would like to see is perhaps something like this. And I would like to perhaps enter on this one right here for a trend that might look like this. But I have a very hard time seeing this happening with the way Bitcoin is looking right now. I do like that we're kind of creating a higher low here, potentially creating a higher low. And I think that would be, in my case, that would be confirmed if we see something like this. I think that would probably confirm this. But for now, I do believe Bitcoin is right. Like, Bitcoin has some resistance areas to get above. And so I'm not really feeling very safe about entering altcoins, because I mean, Link looks good here, but I don't see many other altcoins that look very interesting. Well, there's some. I don't know. I'm not sure what.
Yeah, for me, the whole cryptocurrency market itself, and of course, it's majorly influenced by what Bitcoin is doing, no doubt about this. But it's Bitcoin is missing this momentum at the moment. Actually, the market, the last days, are kind of boring. We didn't have the volatility we normally have, especially when we break out of zones, which we did last week. So, it's kind of like everybody's waiting. What is going to happen here on a macro level? How is the inflation data going to be? How maybe are the NFPs going to be on Friday, which for sure is going to have a major impact on the stock markets again. So maybe we have to be patient, actually, and we're going to see the big moves in cryptocurrencies on the weekends, as so often like we've seen in the past. Sudden moves on Saturday or Sunday.
Yeah, I mean it's Wednesday now, so it's only 2 days till it's only 2 days till the NFP event, which is happening on let's see, what time is it? It's no, that's the wrong one. Which is it?
12:30 UTC, I think,
Yeah,
normally, no?
yeah, 12:30 UTC. So that's a huge huge event on Friday. It will move the markets. Like, this always has a great effect on markets, almost all markets. Like it's this and the Fed, like FOMC, is probably the two
Yeah.
events that has one of the biggest effect on markets, and it affects everything traded versus USD, which is obviously Bitcoin, and because of Bitcoin being affected, the whole crypto market will get affected. So my plan for this week is to like I am in one position right now on let's see, which one is it? It's I think it's CAD JPY. Let's see how that one looks. Yeah, I'm in this short right now, which I entered this morning, which is just a so the problem here is CAD JPY. Usually, I think AUD JPY is a better example, but AUD JPY usually acts quite bullishly in a risk-on environment. So if Bitcoin starts to rally with the S&P 500, usually most of the time you'll also see AUD JPY moving quite nicely. What I'm looking at here is I'm looking at AUD JPY in a hitting a resistance area. It has broken down, and this breakdown was, at least this breakdown right here, was in part caused by the Australian central bank interest rate decision. But but most of the JPY pairs are seeing some bearish structure right here. So I entered CAD JPY first based on that short signal right here, which kind of lines up with that rejection at resistance. But from a technical perspective, I quite like this as a break and retest, which is also confluent with my system. So that's the only trade I'm in right now. We do have and this is important when trading the forex market. You have to make sure to always check the upcoming news events, right? So if you look at tomorrow, you will have CAD right here. So you have balance of trade for the Canadian dollar at 12:30 UTC. So I will like, best case scenario is if this one starts trading perhaps down here tomorrow at the time of that news release. Either it's just going to stop me out, or it's going to be trading down here. But if it's trading around entry, I don't really have any other option than to exit this trade entry, because it's just not worth staying in a position with a major news event happening. And with the NFP event happening, I'm probably like, if it's in good profit, I'll put in a tight stop loss around that NFP event. And when it comes to crypto, like, there might be, usually I want to have like 72 hours, or at least 2 days prior to news event. So right now it's around 2 days until the non-farm payroll event is. So if I'm going to be taking a trade on an asset that might be influenced by the market event or the news event, I should take that trade today. And the only interesting trade I really had was Link, and I feel like I missed the opportunity on Link right here. So for me, I don't know. Like, if we get a reclaim, if Bitcoin reclaims this level right here, and for me that would mean a break to hit that resistance area above, and then a bounce here. So something like this. I don't know exactly how it's going to look, but something like this. And if this happens on Bitcoin today, and we have a good altcoin that lines up according to my system, which might be perhaps Cake looks decent, perhaps Uni looks all right. Like some of the stronger one, V-Chain is already making that move. You can see how it's like has that bottom formation right on the 4-hour EMAs and all that, and you have the stochastics RSI. So I'm basically looking for something that looks like V-Chain prior to this move.
Yeah.
And I want to see something that's above the, like XMR. Monero is showing the same thing as V-Chain here without the breakout. So I'm basically looking for something that is above the daily moving averages, so above the daily 20 and the daily 50, and also preferably above the 4-hour 20 and the 4-hour 50. That would tell me that there's some good strength in the markets, and there's not a lot of coins like that out there. I think Uni is one of the most interesting ones because it's above above all my indicators. It's above the weekly open and the monthly open as well. So you might want to see something like this. And the setup here might look something like this, right? And this would definitely be a setup I might be interested in taking today. Something like that prior to the NFP event. So this it has to either play out completely or have to secure the position prior to the NFP event in 2 days. And this is not really going to play out most likely, or I'm not going to take the trade unless Bitcoin reclaims this level here. So for me, it's I think it's more about a waiting game here.
Yeah. Absolutely. And it's hard sometimes, no? You kind of, when you're used to, okay, you have a couple of trading setups maybe per day, but at least you can consider. Doesn't necessarily mean, of course, that you enter the trade like we just saw. But it's kind of hard to be patient and wait until things develop. The more we have these sideways, kind of boring sideways movement, the more impatient I personally also usually get, because I really, I want to trade something there. So I have to restrain myself and tell myself, even after 25 years, over and over again, no, wait for the setup. I always have to remember my coach, so to say, the person that majorly influenced me when I started my trading career, saying, if you're not bored 75% of the time being a trader, you're doing something wrong, Dirk. So be patient and wait. Can you do me a favor? Can you put the Solana chart on? I haven't looked at it. I just read this morning that there was a hack with money being taken away.
I read something about that as well. Let's look at the it's if there's a bigger hack, I am not really seeing that in the markets.
Not performing so bad for that, But I haven't looked into this. I just saw something on Twitter this morning. Haven't had the time to read really into it. So maybe if you consider taking setups like Lip just showed us, maybe don't do it with Solana at the moment. Do it with other altcoins.
Yeah, absolutely. That's a good point, and that's the problem. Like, I think that is one of the biggest problem with altcoins. Like, I have in my watch list here, I have I do go through it like once or twice a week, once every other week. I have like around 200 altcoins, and like there's no way I'm going to be able to manage the possible news events or whatever for 200 altcoins. So that's a big part of why I believe the crypto markets is. A lot of people come into the crypto market and think it's easy to trade. It's like easy money. You have the 10x's and 100x's. Everyone who joins crypto will be a millionaire, but it's not that easy. Like, it's really not that easy. So in the Forex market, if I'm trading Euro USD, I have to figure out, is there any news event for the Euro? Is there any news event for USD? What's happening? Like, just a quick overlook of the macroeconomics, right? It doesn't have to be very, very specific. Now, Euro USD might not be the best example, but if you look at the crypto market, like, first you have to look at Bitcoin. So what is Bitcoin doing? Is Bitcoin at resistance or is Bitcoin at support? If Bitcoin is at support, you're not going to short altcoins. If Bitcoin is at resistance, you're not going to long altcoins. And then when you enter an altcoin trade, like, every altcoin moves with each other. So if you find 10 altcoin trades, it's not like you can enter every single 10 trade at once with 1% risk, because you're then risking 10% your portfolio, and you didn't have to look at Bitcoin. What is Bitcoin doing? Is Bitcoin moving up or down? Is that resistance? It's much more complicated than people think. And I do believe that's why a lot of new traders come into crypto and they fail miserably. It's because they think it's easy, and they look at the forex market, and they think like they have no idea about the forex market, and they look at it like some type of super professional game of trading where only really veteran traders can trade. But crypto is for everyone and super easy. In my opinion, trading the forex market using my system it's a much more a much more relaxed way of trading. It's more consistent, because in the forex market, of course, you get some big moves and added volatility and stop hunts and that kind of stuff, which is not really a problem for me because I have quite wide stop losses. But in the crypto market, anything can happen. Like everything can happen at any time. Solana just got hacked. Like your USD is not going to get hacked.
No, it's also a liquidity thing, isn't it? I mean, look at especially the forex markets. You have like $5 trillion that are moved every day, so it's impossible to kind of influence that into your direction. Of course, if you then have some altcoin that is, I don't know, at number 75 according to the coin market cap, that you can where you can influence the price with maybe just a couple of $100,000 of US dollars already majorly, that's a whole different game. Absolutely, really, if you're really into trading, stick to the liquid assets where in terms for cryptocurrencies, maybe to the top 10, maybe top 20 of according to the coin market cap.
Yeah, and also, I mean, it's you gotta understand the risk associated with crypto and low cap altcoins, and really manage your risk accordingly. We have an interesting question here. Is full-time trading possible? And I would say, of course it's possible, but it's probably, I believe, it's probably one of the hardest things to do. It's probably one of the hardest professions to have, because if you're like, imagine you are a regular worker, you have you work 9 to 5, you have a good salary, you have a decent life. You might not be super happy with your job, but you have a boss, everything is taken care of, you get your salary every month, you have your insurances, you have your pension, everything just goes pretty nicely, and then all of a sudden you're going to start. So let's say you have the capital. First of all, if you want to trade full time, you need to have a lot of money. That's the bottom line. Without money, you're not going to be making any money. So you need money to make money. And so let's say you have the trading capital. So let's say you have at minimum 100K USD. In Sweden, that's going to be around in Sweden, we say you need somewhere between 800,000 and 1 million kroners, which is around 100K USD, to be able to trade full time. And then you have to figure out what amount of money do I need to survive each month, and how many percentage is my trading system. What's the performance of my trading system over the course of a year? Will you be able to make a yearly salary with your trading system, or a monthly salary with your trading system based on a monthly performance with the capital you have? And if the answer is no, the question is the answer is easy. You're not going to be able to trade full time using that capital. So you need to have more capital, right? And then on top of that, you're basically starting a new business, right? So you're going to be your own boss. You're starting a new business. You have to take care of everything yourself. And if something goes wrong, there's no one to blame, because you're the only person that made that decision to take that trade. And that mistake you just made is only you. You can't blame anyone. The market doesn't care. Nobody cares. It's just you in the markets. And it gets lonely, right? And it gets really, really frustrating. So honestly, I don't recommend people to go full-time trading without having a secondary income, right? It's going to take a very, very long time for most people to be able to trade successfully and trade profitably with only trading as a single income, right? So I would say stick with your regular job as long as you can until you have a good trading capital, maybe a yearly salary saved up, because you're going to be losing, right? You're going to be losing a lot. You might have 2 or 3 months of losing trades, which is going to eat up your trading capital a lot. So you need that saved capital to be able to actually survive. So I don't know about you, Dirk, but I try to always recommend people to, because I do get DMs from people like, oh, I'm going full-time crypto, because I see people on Twitter being like, oh, I went full-time crypto. Well, what does that even mean, going full-time crypto? Like, does it mean that you have a job in blockchain industry? Sure, that's good. Or does it mean that you just decided to take your hard-earned saved money and start trading shit coins and try to make a living? If it's the latter, it's not a good idea. Honestly, it's not a good idea. And a lot of these people, I asked them, what's your trading plan? What's your trading system? Can you describe your trading setup that you're going to be making money on in 2 sentences? And if they can't describe their trading system in about 2 sentences, you probably don't know what you're doing. So it's hard. I don't want to discourage people from becoming full-time traders or trying to become full-time traders, but I'm just trying to manage people's expectations and say, like, I started 2017, and I think it took me about 2 years to develop a system, then 1 extra year to perfect that. And it takes a lot of many years to be able to make a living of trading.
Also, don't underestimate like the effect it will have on your mind, psychologically speaking, when you're really dependent on your performance. When you're in a situation where you say, like, I didn't, my monthly performance was 0, or maybe I lost money. I don't know how to put food on the table anymore. If this continues for a couple of months and so forth and so on, is going to put you under a lot of stress. So what I always say is, and funny enough, I did a video on this also, I think a couple of months ago. I said, okay, how much money do you really need to start trading? And you have to make the breakdown. If you are living, let's say, downtown Manhattan, and you probably need something like $20,000 just to have a normal life there, because it's just crazy living downtown Manhattan. The rent is crazy. If you are living somewhere in more rural areas, I don't know, like maybe Bali or wherever, or somewhere rural Germany, for example, 2,000 euro or even 1,000 euro might be enough. So the bandwidth of the money you need in order to have a sustainable lifestyle with trading can be really anywhere between, I agree with the minimum of 100,000 US dollars and maybe $1 million or 2 million. And then comes the next step. So you need to have, before you make the decision, you need to have a system that is profitable. You need to have proven to yourself, at least for a year, in my opinion, real life trading, that you are earning money. And what most people also don't do is that they don't set realistic expectation. Because they heard, like, oh, going full-time crypto, I made 10x, 1,000, 2,000, 100,000% on my money. This is not realistic. Trading, if you are trading full-time and you make something like 2 or 3% per month, this is excellent already, because imagine this is somewhere between 30 and 40% a year. If you are able to do that and with good risk metrics, so that means you're not at one point losing 95% of your capital in order to gain like 30% or something like this. If you have like good risk metrics, say you have a drawdown of 10 or 15%, but we're able to make 30 or 40% over a year, it will be very easy actually to attract capital then also, to find investors out there that are looking for alternative investments that are going to give you 100,000 or 500,000, or find hedge funds, that are interested in employing people that trade their money in order for a revenue share. That is all possible, but in the beginning, start with concentrating on building up this track record. Whether you do it for yourself with Excel, or you use, for example, things like PrimeXBT is a good example, in my opinion, with the copy trading module. Everybody can be a strategy manager there. And this will be a verified track record for you if you want to do this with very little capital. Do something like this. And then when you have the confidence saying like, okay, this really works, I can consistently on a monthly average, on a weekly average, earn money with it. Well, then you can maybe think about, okay, what is my next step now? Do I have enough savings to do it for myself? Or maybe should I reach out to somebody out there to try to collect some investors' capital? Pro and cons to both sides.
And also, I think you mentioned the PrimeXBT co-listing platform. So it's a really good platform. It's really cool to have a public co-listing. So I've tried it, honestly. Like I've tried it, but it's not for me from a like mental point of view. And I'm not saying that I am invested in several traders on the co-listing platform. I think it's really, really good. But as a strategy manager, I think as soon as I have a public journal that I'm also like on my live streams. I have a public journal on PrimeXBT where I kind of show all my trading and my journaling, and the fact that it's public really affects my trading performance negatively a lot. So I remember having a co-listing strategy running alongside my private trading. It's like I have now. I have the public journal running alongside my private trading, and for some reason, my private trading goes better than my public trading, because sometimes I take a trade on my private account with 1% risk, but I'm a little bit fearful because of losing publicly. So I might take lower risk on the public portfolio, and then that is a winner, and it's a too small of a winner, and with time the difference in risk really becomes huge in the profit difference. So for people that want to start trade on the co-listing platform, or have a public journal to be able to show possible investors or prop firms or hedge funds or whatever, make sure that you're actually trading first trade live for a while using the exact same system, and build a system with very, very clear entry triggers, exit triggers, and stuff like that. And then just completely, like when you're doing it publicly, just do it almost like automatically, right? Just follow the signals exactly as you did in the past, almost like a robot, because losing publicly and showing your results publicly will have great effect on you mentally. And like trading, and that's something you mentioned, and I didn't mention when it comes to trading full time, is the mental stress that it causes when you know that you have to perform, because you don't have an option. You need money to survive, so you need to perform long term. You need to make that money, and that creates a mental stress. And trading is like when you learn TA, and you have your technicals in place, you have a system. There's not really any huge reason to keep on learning TA, because if you already have a profitable system to trade, you stick with that system, right? And you don't really have to evolve or develop that system much. You have to test it regularly to make sure it's still performing, right? But you have to work on that mental state of mind, and that's, I believe, the most important part. You have to have the right perspective, right? And it's really hard. It's really, really hard.
I did, like from a personal experience here, maybe a while ago, I actually was managing money for other people as well. But like you just said, Jonatan, it's really it's a whole different mental game, mental stress that it puts on you. Because from my experience, what investors usually do if they give you money, they'll praise you if you show a good performance. But of course, you're going to have weeks and months also where the performance is not so good. We know that by the end of the day, the bottom line matters. So what have you done within a year or 2 years? nobody's going to ask anymore, of course, if you had like maybe 2 or 3 months in a row where you lost some money. But what investors, especially inexperienced investors, will usually do is then they'll see, oh my God, this guy lost money this month. He lost 2% instead of gaining 2%. I'm going to withdraw my money. So the next month, suddenly you are performing good again. You made 3%. Then they are coming back to you, giving you money. So they are always, in a way, acting a little bit pro-cyclic. And for me, that was a lot of stress, to deal with this kind of things. So eventually I also decided, you know what, I'm just going to trade my own money and stick with that and have peace of mind, because this is what I'm used to. I don't want to deal with other people's money anymore by the end of the day. But I can understand both sides.
All right, so Bitcoin is now, let's just move this up. Bitcoin is now testing an interesting area. Like Hans said here, it's testing the weekly and monthly open. I think that is a very interesting area. Not only because it's the weekly and monthly open, but also because it's technically a good level. So it does look like there's definitely some risk on vibes happening here. And if you look at, let's see, the S&P 500, well, it's not. Yeah, if the S&P 500 breaks these highs, or even starts trading up to these highs. But if it breaks these highs, we're probably going to see Bitcoin start moving higher again. And for me, that there might be a setup here. So that setup I would have to see something like this and move up to test. And you can see how I've used the fib here to try to predict where the top might be. So if I want to enter on the retest here, it has to be confluent with the 50% or the 618. So usually what I do is I try to predict the move using the fib, and I place the fib so that the area between the 50% fib or the 618 is at the breakout area, something like this, or the 50. And if I use the 50, if you add a line here at the 0% fib, you'll see that it lines up quite nicely with this resistance area right here. So we might actually see Bitcoin move up here, test that resistance area, and then come down and retest the weekly and monthly open. And now the weekly and monthly open becomes very interesting because it's now confluent with the daily 50 EMA and probably also the 4-hour moving averages. So here you have something that aligns with my system almost perfectly. Because, like I said in the beginning, I only go long if price is above the daily 50 and daily 20 EMA. Which they are right now. And looking at this, we actually do have a trend here. We do have an uptrend. I mean, that's not the best trend, but you know what I'm saying. Like we actually do have an uptrend right here. So yeah, we might see something interesting here on Bitcoin. So if this move happens on Bitcoin, if we do test this area above, Link will probably be up here, right? So that trade is long gone. But then on Link, we might get that, like I said before, this right here, the test of the weekly monthly open. So yeah, it does look like there's something happening here. Yeah, daily looks like a good uptrend as well. And what do you think? Are we going to see
it looks a little bit to me like that is playing out what I thought last week would play out, or the week before, when we came out of this Bollinger squeeze pattern. And interestingly enough, the area where you might be looking at the trade entry was exactly the area where I entered already. I was stopped out, like I said earlier. But it looks a little bit like if we can maintain these levels, and it's really the factor is going to be the S&P 500 later on, when it really opens up at 230. I know there's like CFD trading going on before that already. There's future trading going on, but in my opinion, the opening bell is going to be the important factor here. If we see a strong opening, then the SP 500, it could give Bitcoin the confidence it needs to finally break out of this super boring sideways range that we have been seeing for weeks now. Let's hope so. Yeah, it could be an interesting setup, and I wonder if we can revisit this when we do the next live stream in 2 weeks. Then,
well, for my CAD JPY setup, I hope it doesn't happen, because this is because if the S&P 500 opens strongly and Bitcoin starts moving, there's a big risk that this trade will get stopped out. So hopefully that's not going to happen. But if it does happen, I have this possible long on Bitcoin that might make up for that one. So it's been over an hour, and I would like to thank you, Dirk, and I would also like to tell everyone to go follow Dirk. He's on YouTube as PrimeXBT Academy. You should also have a link in the description to his channel, so definitely give him a follow. And you can also sign up to PrimeXBT, where we are both trading, and that's where I have the current open position. I told you I wanted to have a public journal on PrimeXBT. So here's that trade right here, where I'm trading the CAD JPY long. So I have a 13K account on PrimeXBT that I'm trading publicly. And just to show you full transparency, this is the CAD JPY short I'm currently in. I'm down $16. So not a lot of money, but it's not about the money. It's about the percentage, right? It's not about the dollar value. It's about how many percentage you can make. And then you would have to replace that dollar value with whatever your account balance is to get a good idea of what is happening. All right. That's it for today. Thank you for joining, Dirk. And
my pleasure. Thank you for having me.
Yeah, great pleasure having you on. And I really do like that analysis you did in the beginning here with the Trump versus Biden presidency. So I'm definitely going to keep an eye on that.
Let's see, guys. And then revisit, when we are in November or December 2022, if that really became true.
Yeah, that was going to be really interesting to see. I hope you have alerts for that.
I do.
All right, man. Thanks for joining. See you guys in the next one. Bye.
Take care, everybody.